Right. Question one, it's about allocation of overhead costs from service departments to the production departments. Okay, so we have Tel Company has three service departments and two production departments. The company has provided the following information for the five departments, and we are given the data in a table. And the service departments are the first three here, A, B, and C, and the production departments P1 and P2. And we will notice the overhead costs is at the top of each department there. That is what has already been allocated. So our position, our task is to reallocate these three 100,000, 40,000, and 30,000 to these two here, P1 and P2. Okay, and we have to do so on the basis of these items here: number of employees, square feet, and machine hours. Okay, so the company allocates service department costs utilizing the step down method in the following order: number of employees, space occupied, and machine hours. Now, remember what the step down method is. Now, if you remember what the step down method is, it's using this order here, we will allocate or reallocate rather department E, then department B, and then department C. And what would happen is, as soon as we eliminate, as we reallocate one department, it would be eliminated and would not come back in. Okay. In the exam, a sheet was provided to prepare the schedule to allocate it. Okay. The first, I have worked it out here already. All right. The number of employees to reallocate the 100,000 first would be here. We put it in brackets. I don't know how this is showing up on your screen, but this is how the form was. I try to reproduce it as much as possible. Service department A, we will do that according to the number of employees, and we eliminate that first. And how we determine the amounts to put in here, we take the number of employees and we add them across, and we'll get 1,000, 1,500, 1,760. Okay, next we take the 60 and we put it over the 1,760 and multiply it by 100,000. That's how we got the 8824 here. Okay, Then we do the same thing with the service department. Okay, the 150, put it over the 1760, and we multiply it. And that's how we will get the 2941, 29,411, and the 68,204. You can check the calculations if that is correct. Okay. After we finish all four of them, we will add down. So when we add the 100,000 with this minus 100,000 here, we'll get 0. And the 40,000 and the 8824 gives us 4888. This should be 23, right? 24. And 30,000 plus that gives us this 500 plus this gives that 600,000 plus this gives that. Now, what I wanted to notice here is this is the step down method. In that method, the departments are eliminated one after the other. You notice the service department, that is. Um, you could be given a different method in either the direct method, okay, or continuous allotment, right? So the next step would be, after we add it, is to allocate the next department. That would be this one here, and that one is going on the basis of space occupied. So you'll use square feet here, and you'll do the same thing again. You add these across. This time you're not allocating this 2500, so you'd leave all that. Okay, so this 4823 would be eliminated, and what we'll do is we'll add these here. 80, 40, and 10. So I will get okay. I may have made a mistake in the first one, right? The one that you allocating, you will not add it into the total, right? If I said so, I'll do it back again. To allocate this one, you add this, 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 and this. You get 1700 rather than 1760, right? And you will have 150 over 1700, 50 over 1700, 500 over 1700, and okay. Let's see if I can write it in there for you. I'm not very good with this. Here would be, the total would be 1, 7, 100, right? And this one would be 1, we'll get the proportion 150 over 1700, right? Here we'll get 150 over 1700, and here 500 over 1700, 1000 over 1700. Okay, that's how we got the figures. So what you can do is try them over and see if you come up with these figures here. The same thing will happen with this one here. After we add down, we get a new total for these 4 departments. This one was eliminated, right? We will start on the other department, and this one would be eliminated by minusing the amount that we have here, and
So
yeah,
if you add up the whole column, you're getting what I mean 1760.
right. I'm saying here, don't include the one that you, okay, the one that you're going to allocate, right? You don't include that, all right? I think earlier I said the opposite, okay? I'm not sure, right? And you'll do the same thing with the one now. You will not include this and this. You just add these two, 3 in fact, and you'll get 80 and 40, 120 and 10, 150,000, right? So this one would come up to 150,000.
So I ain't seen no point in that.
Ah, you're not seeing the point out, right? But okay, let me get back the other pointer. Okay, when you add this and this and this, 80 and 40, 120,000 and 10, 130,000, right? Now you will have, since this one is already eliminated, and this one you're working on to eliminate, you just add these 3. Okay, so you eliminating this, and here we'll get 10 out of 130 by 4823. Okay, so here would be 10 over 1. Difficult to write with these things. 130, right? And here we'll get 40 over 130, and here 80 over 130, 30. Okay, and it should work out to these figures here. Then we'll add down again to the position that's saying adjusted balance, and we'll get 0 here. So you notice both these have been eliminated now. And when we add this and this, we'll get this new figure here, the adjusted balance, and the adjusted balance here, and the adjusted balance there. And we will be looking to how to eliminate this one, the step down method. That's how it goes, right? So we minus off these, this one 36,697, and we come back here now. Oops. We have machine hours. We're going to allocate this total on the basis of this. So we'll add it and we'll get 60,000. Uh, 6,000. One more zero. Okay, and this one will get 20,000 over 60. Where am I? So here we'll get here will be 20 over 60, which is equal to 1/3. And here will be what, 40 over 60, right? And you multiply it by this figure here. Okay, now in this exercise, you'll get them here at the bottom here would be the allocated figures that are allocated to the total allocations to the production department. Okay, if you add these two together, you should be getting the same thing that you have up here.
If we add what?
When you add all these here, right? 6 and 5, 11, 12, 1270. Wide zoom there, boy. Okay. Right? When you add these across here, you will get 1270,000. You don't have to add them. That's just a check that you have balance of 12. It should be a 7, right? And if you add these here, you should get the same thing. 7 and 5, 12, 36, 56, 13, right? You'll get 1270 down here. So you'll know if your sheet has worked out correctly. Okay, you have allocated all the cores. If it's not equal, it means you have an error somewhere inside here. I would say don't go and look for it in an exam because you may not find it and you might just waste some time. Once you have the method correct, okay, you are allocating or are reallocating the service department one after the other using the specified basis, then you have no problems. You should get the mark if your arithmetic is incorrect. Okay, so
So,
that's what.
but for
Uh,
exam,
uh
they give you this table to
Go ahead. I'm not hearing properly because my connection is kind of unstable.
alright. What I say for exam, they go and give us this table and we go have to fill in information.
Yeah, you'll have to fill in the figure. So part of it is the table itself is a clue as to what to do. Okay, all right,
Alright.
all right. Part B, uh, I think, all right. This here is supposed to come first, where you calculate the predetermined overhead rates. We take the amount that we get at the from the production departments down here, and we divide it by the machine hours to get the, okay, so 556,666 divided by 20,000. Okay, as a matter of fact, you could do this first before you allocate the thing, and you get the predetermined overhead rate, and then you apply it to get back this figure. Okay, so we divide the 713 by 334 by 40,000, and we get 17.73 per machine hour. Now, in order to do this, we have to know the formula for predetermined overhead rates. Okay, it's the total overhead for the department, total overhead costs divided by the base. In this case, the base is machine hours, and the total machine hours for production department one would be 20,000 here. And this is the total overhead cost. So when we divide it, we get $27.84 per machine hour. Production department two, 713, and we divide by 40,000, we will get the 20,000 and the 40,000 is given to you. Okay, you'd see it, it's here, right? Machine hours, 20,000, 40,000. Okay, and your answer would be dependent on here. So you have to get this figure first before you can do this. Right, so that was part two of part E. Next we go to part B, which has to do again with direct labor and indirect labor. All right, Sue Lala is employed by Tel Company, that's the same company. She works in the production department, which assembles parts for making the company's products. Sue is paid $60 per hour for regular time. She's also paid time and a half per hour for all work in excess of 45 hours per week. And the first week, Sue worked the normal 45 hours but was idle for 3 hours due to machine breakdown. No overtime was recorded for the week. You are required to allocate Sue's wages for the week between direct labor costs and manufacturing overhead costs. Okay, so this would be direct labor, and manufacturing overhead costs is indirect labor. All right, so working on the first part, the idle time. This is something you have to know in order to work with this. The idle time would be manufacturing overhead or indirect labor costs, and the hours, normal hours that you work would be direct labor costs. Okay, so it's gonna be 42 and 3. Direct labor would be 42 by $60 per hour, revenue that, and the manufacturing overhead would be $3 by 60. Okay, which gives you 180. Um, right? Sometimes they may call the manufacturing overhead indirect labor, right? So we look at the next scenario. In the second week of her employment, Sue worked 60 hours. She had no idle time for the week. You are required to allocate Sue wages for the week between direct labor costs and manufacturing. Okay, so this time she had 60 hours for the week, no idle time between direct labor and manufacturing overhead costs. All right, now 45 hours would be normal hours, and the next 15 hours would be overtime. Again, the overtime hours, as we saw last week, if the client that you're working, that the doing the job for, asks for you to work the overtime, then it would be direct labor costs. Okay, other than that, it normally is manufacturing overheads. Okay, so in this case, the client didn't ask, they said and didn't say anything about it. So the direct labor cost would be 45 by 60, 2,700, and manufacturing overhead would be 15 by 60 equal to 13,050. All right, that's another part to the question. Shell company has decided to change its method of payment to its employees. Identify 2 other methods of payment that Shell company can use. Okay, 2 other would be piece rate, commissions, contract. Okay, uh, any one of these two would work. Right now, they are operating on what they call hourly rates. The next part of the question is the last part. Use a diagram and an example to explain each of the following cost items. Fixed costs, variable costs, step costs. All right, I have them here. The diagram for fixed costs is just a straight line going across. Variable costs is a line running straight through the origin. And step fixed costs is something like this. After a certain amount of units, okay, right, step fixed cost is something like this. After a certain number of units, the fixed cost would increase. and you start a new line higher up. Same thing again here, so you get a kind of step effect. Okay, example of fixed costs would be something like rent, where you pay a fixed amount of rent for the year or for the month or whatever the period is. Variable costs would be like direct materials or direct labor. Okay, any direct cost or expense is variable. And the step fixed cost is, like I said, part of it would reach up to a certain amount of units, and then you get an increase. So you're looking at something like where you have a full factory, you're working at capacity, full capacity, and any time you want to increase the number of units, you're going to have to increase the thing. So if you take something like rent, if you're working at full capacity, you're going to have to rent additional facilities if you increase the output. Okay, so you will get something like this. You'll have to pay an additional rent, rent out another rent, another factory somewhere, or maybe in the same building you could get some additional space again. So what will happen is this will increase again. Okay. Um, there are other expenses or overhead costs that may work similar to that. Something, I don't think electricity would work that way, but if you explain it, right? But usually for step fixed costs, the example is rent, right? You're working at full capacity and you need to increase the amount of units for your market or something of output. So you have to get additional space. Your rent is going to increase. Okay. Another item that you could use here too might be depreciation. If you have machines that could produce a certain amount of unit, the depreciation on the costs would increase. If you increase the amount, you have to get an additional machine, right? Anything where you have to get additional. Okay, so that brings us to the end of that there. So that's module one for 2013. Okay, now last week we had done 2014, and a part of it we didn't do the first part. So